Hello, and thanks for tuning in, investors. Today I'm presenting the store of value with MPC Markets and StroPro. So, today I'm going to explain the bullish case for gold, why it has further to run from here, and why you don't have enough exposure to gold in your portfolio. Then I'm going to explain two ways to get exposure to gold via structured products that most investors couldn't do themselves. And yes, these strategies are usually reserved for institutions, the big end of town, and MPC markets with StroPro are now making them available to sophisticated Australian investors. So, yes, let's go. But firstly, let's talk about our disclaimer. Everything presented here is for educational purposes and is general advice only. Structured products are only available to sophisticated Australian investors. So, firstly, who is MPC Markets? MPC Markets are investment advisors. Our motto, as you see up on the screen, is founded by investors for investors. And it's founded by a team of three experienced investors themselves: Mark Gardner, Kai Chen, and myself. And our main difference is all three of us have lots of experience trading and investing our own money. So we understand what's needed to profit from the markets, and we know it's a tough game. We saw a need in the market for investment advisory where clients, not fees, were the priority. So our client first philosophy and our motto there means that clients can have peace of mind, knowing that we're investing your funds in ways where they can make more money and take less risk. So on to the bullish case for gold and silver. So a little bit of my markets history. I actually started in the markets back in 2001, and I did my first, or I got exposed to gold back in 2004, 2005. And in that, I traded the move from $500 to $700. So, woohoo, big move back in those days. And that move made me think I was a genius. But then it quickly fell back to 550, and Mr. Market, taught me a lesson. But the thing was, that trade got me a taste of gold fever, and I've loved it ever since. And I've had stints where I've owned some physical gold, and I got into digital gold or Bitcoin during the 2017-18 ICO boom and bust. So yeah, I'm quite versed in all the reasons that the gold bugs talk about when they're talking about gold. And one thing that I've kind of observed from my years of experience in trading gold, I've learned that gold tends to have periods where it chops around and it kills impatient gold holders, and it has periods where it trends nicely. And this is usually during a period where the central banks are pumping liquidity into the system or they're printing money. And it looks like they're backed into a corner right now, and they're kind of stuck, and they're looking to do it again. And we're seeing that the market is actually calling for a rate cut in the US in September. Okay, so earlier this year, I was on Ausbiz and said that if gold were to duplicate the run that it had from 1300 to 2000, which happened back in 2019 to 2020, then gold will have that similar run and run from 2000 to around the 2700 to 2800 area. So if you look at that chart that I've posted up there, we've got two blue trend lines and they're identical. Okay, so I just duplicated that trend line from that move from in 19 and 20, uh, stuck it onto the right where this move just started, and if history repeats or even it rhymes, just based on that blue line, we could hit 2850 on gold in April 2025. So in short, we're in the middle of a period where gold is trending nicely higher. And so, you want to kind of just let gold do its hard work and let the market make you look good. And the move hasn't finished, in my opinion. We still have another move higher, and that's just based on technicals. Now, onto a fundamental reason, and that is that central banks are buying gold hand over fist. Uh, so they've been buying gold for the last decade. You see in that green period on the chart, they were actually net sellers of gold. And what they have been doing is actually just accumulating gold for the last decade. And what's happened that in the last 2 years, the BRICS have really stepped up their purchasing. So in 2022, 2023, and even 2024, they've been buying gold in record amounts. And it's great to have central banks behind you on the trade. Okay. So I'm not in the camp where the world is going to stop US dollars and go to a gold standard. But I do think that this is a sign that the world is going to stop lending money to the US government. And that brings me on to the next fundamental reason, and that it's all about debt. And there's a bit of a chart there. So the red line is the amount of debt that that the US has outstanding, and the yellow line is the amount of interest on that debt itself. Now, so this is the main fundamental reason I'm so bullish gold. It currently has 35 trillion in debt and racking up the next 1 trillion every 100 days. Now, the thing is, the US has actually been in a debt problem ever since I got into the markets. I've even seen covers of Time magazine where the question on the front cover is that does the US have a debt problem? And this was back in the 1960s. Now, the main difference between back then to today is that we're very close to the point where the debt is so large that tax receipts can't even cover the interest on the debt. So to put it in more simpler terms, let's just say you have a household with $1 million mortgage, which is kind of normal here in Sydney. Uh, your interest on that mortgage is, $7,000 roughly. Imagine your income is only $7,000, and that is roughly the situation that the US is in at the moment now. So, history has shown that if empires have to print money just to cover interest on their debt, they are toast. So, going forward, the US has created this situation. They can go one of two ways. Now, the first way is that they can be responsible and reduce their debt. But that means that they will have to cut spending on defense, cut spending on healthcare, cut spending on entitlements or pensions. And can you see a situation where a leader of the US can actually tell the masses that they're going to have to go with less and reduce? I think that's very unlikely. So if nothing changes, chances are, if they keep spending at this rate, they're going to default and they're going to have to print the difference just to just cover the situation. If that happens, gold rises very, very fast. Now, the other way that the US can get out of this situation is to kind of inject liquidity slowly and kind of debase their currency. And so, what that means is that they'll have to kind of print money in a stealth way. So, they'll have to reduce rates. Stealth QE, the most recent one was the Bank Term Funding Program back in March 2023. And history has shown that when the US does that, inflation comes back, and in that scenario, gold still rises, but at a more sort of normal pace here. So in both cases, you know, gold rises based on the current fiscal situation, and it's just a matter of if the US prints slowly or prints fast after default. And so it just means that gold rises and it's just a matter of pace. Does it go slow or does it go fast? So just in summary, we've got technicals that show that that gold is moving quite nicely. And we've got fundamental reasons where the central banks have got your back. They're on the same side of the trade. And it looks like the US has to print. It's just a matter of are they going to print before default or after default? And that's the bullish case or my bullish case for gold. And that's just the basic fundamental reasons of why you just don't have enough gold exposure in your portfolio. So we're going to talk now about two structured products. Both are bullish on gold and silver. The first is an enhanced growth product, which are used by institutional investors to gain capital efficient exposure to gold and silver. So, in short, investors can deploy a small amount of capital and gain same amount of exposure without sacrificing upside returns. So, in this instrument, there's the details there. The leverage in this case is 10 to 1. This instrument has a 12-month term, and the underlying is the Spider gold shares. And you get a minimum investment of $10,000 here. So just in short, for a $10,000 investment in this gold and silver levered long, you do get 100,000 of exposure to Spider Gold and Spot Silver. So if we just take nice round numbers, let's just say an investor wants to have a 10% gold exposure in their portfolio, they'd only have to apply 1% of capital to this instrument to get that same exposure. And here is a payoff diagram of this instrument. So going from left to right, left is where gold rallies quite nicely, and we make some great money on this trade. In this scenario, you're making 200% on the actual trade. Second scenario is where we roughly break even. So gold is only up 8% in this scenario, and we'll actually just roughly break even on the trade. And the last scenario is where gold actually goes backwards, and we actually lose our initial investment. Now, the thing with this instrument is that investors can't be margin call and lose more than their initial capital on the investment. And also, since gold and silver are very liquid instruments, there's daily liquidity available, so investors aren't locked up for the term of the investment. So, in other words, if you enter gold or this instrument today, and gold and spot silver run overnight, you can actually take profits the next day. So our second structured product is actually a smart entry note on the ASX Gold Miners. MPC likes to coin it that you're getting paid for patience in this case. So a smart entry note is usually a trade only reserved for investment banks and professional traders. But thanks to StroPro and MPC Markets, any sophisticated Australian investor now has access. And here are the details of the trade. So the smart entry level is 20% below the current price of Newmont and Northern Star. And the important number here is that you actually get an 8.5% coupon. The term of the trade is for 12 months, and the instrument actually has monthly payments. So I want you to digest this. You're basically getting 8.5% to potentially re-enter gold miners Newmont Northern Star at 20% lower. So I think that's a great trade, and I just want to emphasize the point here for any gold bugs that uh, want to have a think about it. You're actually getting paid to hold gold exposure. In other words, you're getting an income from gold, and that's actually been one of the downsides of gold in the past. That most investors would rather have stocks because they pay dividends, or bonds because they pay an income. So let me repeat that: this structured investment, this smart entry note on Australian gold miners gets you 8.5% for holding gold exposures, and you get an income from gold. So I think that is a great deal. Now, if you have any interest or questions about investing in gold via these structured products, I've put our contact details on this page. So call us on 02 7208 8002 or email the team at invest at mpcmarkets.com.au. So, in summary, we've learned about the technical and fundamental reasons that gold is actually currently in the middle of a move higher. So, chances are it's got more room to move from the upside. And just technically, my target is about 28.50 from here. We've also talked about the dire financial position of the US, which is why you don't have enough gold in your portfolio. And we've talked about using a structured product with 10 to 1 leverage. And so you get a capital efficient exposure to gold. So let's just say you want to have a 10% exposure to gold. You only have to use 1% within that instrument. And we've also talked about a smart entry note on gold miners where you get an 8.5% yield while waiting to buy Northern Star or Newmont at 20% discounts. All fantastic events. So why would you invest with MPC Markets and StroPro? Well, we've got the motto there that we MPC Markets was founded by investors for investors, and we think of clients first. And we teamed up with StroPro so that we want to give clients the best opportunities in the markets available, and you can't do these with just regular stocks. Now, with these structured products, we give you access to global markets, all in a way where you can express your view with a lot more finesse and a lot more subtlety, rather than the binary manner that most advisors usually push. So, if you are interested in getting started, accounts are usually very easy to set up and can be created in the same day. If you are looking to set up a personal or a corporate account, we just need two forms of ID of yourself or of director. And if you have a trust or SMS, all we need is a copy of the trust deed. And you basically, you have access to the Strobe Pro platform and access to all of their great investment and structured products there. So here are the contact details for MCEC Markets. Please call or email if you'd like to get more info. We do have this information in written form. So contact us if you would like this. Call us on 027208 8002 or email the team at invest@mpcmarkets.com.au. And thanks for watching today, and get long gold.